Everyone is focused on Meta spending tens of billions of dollars building AI infrastructure. But I think the bigger story isn't how much Meta is spending. It's what the company could eventually do with all of that compute. There have been reports and rumors suggesting that Meta is exploring ways to commercialize parts of its AI infrastructure by offering compute to external customers. While Meta hasn't officially announced a public cloud business comparable to Amazon Web Services, Microsoft Azure, or Google Cloud, even the possibility is incredibly interesting. Think about what this means. For years, the AI compute market has been dominated by Amazon, Microsoft, and Google. If Meta enters that market, we suddenly have another technology giant with enormous financial resources, massive data centers, custom AI chips, and one of the largest GPU clusters in the world competing for customers. Most investors immediately see another potential revenue stream for Meta, and I agree. But I think there's an even bigger story that the market isn't paying enough attention to. If Meta starts selling AI compute, it could completely change the economics of the industry. To understand why, we first need to understand the business of AI compute. Building AI infrastructure is one of the most capital-intensive businesses in the world. Companies spend billions of dollars buying Nvidia GPUs, building data centers, installing networking equipment, investing in cooling systems, and securing enough electricity to power everything. Before they generate a single dollar of revenue, they've already invested enormous amounts of capital, and the spending never really stops. Every few years, Nvidia releases a new generation of AI chips that offer significantly better performance. If compute providers want to stay competitive, they have to keep upgrading their infrastructure. It's a constant cycle of spending billions just to remain relevant. Now here's where things get interesting. Once those data centers are built, what exactly are these companies selling? In many cases, they're renting access to the same Nvidia GPUs. If I'm an AI startup looking to train my models, I care about a few things. I want reliable infrastructure, fast networking, good uptime, and a competitive price. If multiple companies offer very similar hardware with similar performance, price becomes one of the biggest deciding factors. That's how industries become commoditized. We've seen this happen many times before. As more supply enters the market, competition increases. Companies start lowering prices to attract customers. Lower prices are fantastic for buyers, but they usually put pressure on profit margins for the companies selling the product. I think AI compute could gradually move in that direction. Now imagine Meta entering this market alongside Amazon, Microsoft, and Google. These companies aren't just big, they have enormous advantages. They have access to incredibly cheap financing. They buy hardware in volumes that smaller companies simply can't match. They operate some of the largest data center networks in the world. They're building their own AI chips, designing their own networking equipment, and optimizing every part of the infrastructure stack. That gives them a cost advantage that smaller competitors struggle to replicate. This is why I'm becoming much more cautious on many of the smaller AI compute providers. Companies like CoreWeave, Nebius, Crusoe, and other specialized GPU cloud providers have benefited from explosive demand for AI compute. That doesn't mean these companies can't continue growing. AI demand is still increasing rapidly, and there may be plenty of room for multiple winners. But if Meta joins Amazon, Microsoft, and Google in aggressively offering AI compute, competition becomes much tougher. Those smaller companies may find it increasingly difficult to maintain today's pricing and profit margins. Scale matters, and no one has more scale than the hyperscalers. Now let's talk about why this could be such a big opportunity for Meta. Today, Meta generates the overwhelming majority of its revenue from advertising. That's an incredible business, but it's still largely a single revenue engine. Imagine if Meta could build a second major business by monetizing AI infrastructure. The company is already spending tens of billions of dollars building data centers for its own AI models, Facebook, Instagram, WhatsApp, and its growing AI ecosystem. If Meta can rent excess compute capacity to outside customers, those investments suddenly become much more valuable. Instead of infrastructure sitting idle during periods of lower internal demand, Meta could generate additional revenue from assets it already planned to build. Even if this business eventually generates $5 billion annually, that's meaningful. If it reaches $10 billion, $20 billion, or even more over the next decade, investors may be significantly underestimating Meta's long-term earnings power. And remember, every additional dollar of revenue helps spread the fixed cost of these enormous infrastructure investments across more customers, improving the overall economics of Meta's AI business. Of course, there are risks. Building a successful cloud platform isn't easy. Amazon, Microsoft, and Google have decades of experience serving enterprise customers. They have mature developer ecosystems, software tools, support organizations, and trusted relationships with businesses around the world. Meta would need to build much of that. There's also no guarantee Meta decides to aggressively commercialize its AI infrastructure. Right now, this remains a possibility rather than an officially announced strategy. But if it happens, I think the market is underestimating just how important it could become. Ironically, the biggest beneficiaries of cheaper AI compute may not be the companies selling it. They could be the software companies building on top of it. As compute becomes cheaper and more accessible, software companies can build better AI products at lower cost, improve their margins, and deliver more value to customers. Throughout history, as infrastructure becomes commoditized, much of the value eventually shifts to the application layer. The companies building the best AI-powered software could become the biggest winners of the next decade. But that's a topic for another video. For now, my investment thesis is simple. I'm bullish on Meta because I believe the company has the potential to create an entirely new revenue stream by monetizing its massive AI infrastructure while continuing to dominate digital advertising. At the same time, I'm much more cautious on many of the smaller AI compute providers. If Meta joins Amazon, Microsoft, and Google in selling AI compute at scale, competition will intensify, pricing power could weaken, and maintaining today's margins may become much more difficult. If AI compute becomes increasingly commoditized, history suggests that scale wins, and very few companies have more scale than Meta. If you enjoyed this video, don't forget to like and subscribe. Let me know in the comments. Do you think Meta should enter the AI compute business? Or do you think the market is already too competitive? I'd love to hear your thoughts, and I'll see you in the next one.